let's dive right in. Something huge is happening in Japan's real estate market. I mean, for the first time in decades, we are seeing a surge that's making people around the world sit up and take notice. So in this explainer, we're going to break down exactly what's going on, why it's all happening right now, and what it could mean for the future.
It all kicks off with this number, a 2.8% increase in Japan's national average for land prices. Now you might hear that and think, that doesn't sound like a huge leap. But trust me, in the context of Japan's economy over the last few decades, this is a seismic shift. This one number is our first real clue that the old rules just don't apply anymore.
And here's why that number is such a big deal. This isn't just another tick up. It is the biggest single jump in land prices since 1991, right at the absolute peak of Japan's legendary bubble economy. We're talking about a level of growth that hasn't been seen in over 30 years. That's wild.
So what on earth is behind this historic surge? Well, it's not just one thing. It's actually a really powerful combination of two completely different forces colliding at the perfect moment, creating what you could call a perfect storm in the market.
This is the big question, isn't it? After decades of things being pretty flat, why now? Well, the answer seems to be in this rare mix of financial momentum crashing into very real, very tangible demand from the economy itself.
So on one side, you have this flood of investment money pouring into the market looking for a solid place to get returns. And on the other side, you've got what's called real demand, actual companies that need office space and people who genuinely need a place to live. It's when you get both of these things happening at the same time, that's when things really, really take off.
Let's talk about the money first. And we're not talking about a little trickle here. This is a full-on tidal wave of capital. Investors, both from inside Japan and from all over the world, are looking at the market and seeing a massive opportunity.
And we can actually put a number on that wave. In 2023, just looking at real estate deals over 1 billion yen, the total hit a record-shattering 6.5 trillion yen. That is just a staggering amount of money, all aimed squarely at Japanese property. Now, what's really fascinating is when you break that number down. Yeah, domestic investors are the majority, but overseas investors poured in a historic 2.4 trillion yen. This kind of global confidence, mixed with Japan's still pretty low interest rates, is acting like pure rocket fuel for the market.
But, money alone doesn't create a boom like this. So let's shift to that second force, real demand. This quote just nails it. Companies are doing well, and they're in a fierce competition for the best employees. And a key weapon in that fight? A great office in a fantastic location.
And this isn't just a feeling. The data backs it up completely. Office spaces made up a whopping 40% of all domestic real estate investment last year. We saw these huge deals for office buildings and logistics centers, especially right in the heart of Tokyo. This isn't just speculation. This is a strategic business need. So we have this powerful surge, but it's not a uniform wave washing over the entire country. The story of this boom is actually more of a patchwork, with a very different picture depending on whether you're looking at a major city or a more regional area.
Which of course leads us to the next logical question. Is every town and city in Japan experiencing this? Well, the short answer is no. The reality is way more nuanced, and honestly, this is where it gets really interesting. Let's start with the big cities. In places like Tokyo and Osaka, the boom isn't just happening, it's actually accelerating. Demand for both commercial and residential land is incredibly strong, and it's creating this feedback loop that just keeps pushing prices higher and higher.
Here's a number that illustrates this perfectly. The office vacancy rate in central Tokyo is hovering at just 2%. That is insanely low. It signals a market where supply is just incredibly tight, and it gives landlords a ton of power to push rents up.
Okay, now let's contrast that with the rest of Japan. Outside the major metro areas, the situation is what experts are calling a spotty boom. Growth isn't widespread at all. Instead, it's really concentrated in these very specific hotspots, and each one has its own unique economic engine. And you can literally see this on the ground. In Chitose, a new semiconductor factory is causing an absolute mad dash for housing. In resort towns like Hakuba and Furano, it's the return of international tourists that's fueling demand for villas and hotels. And then along major highways, the e-commerce boom is creating this need for massive logistics centers. Each spot has its own story.
So we have massive demand, but there's one more crucial piece to this puzzle. It's a major complexing factor that's twisting the market dynamics even further and making the situation so much more intense.
The key point is this: it's not just about high demand. The real story is what happens when this incredible demand crashes head-on into critically low supply. And this supply crunch, it's changing everything.
So here's how it works. First, construction costs and labor shortages are making it incredibly expensive and difficult to build anything new. So naturally, new development starts to stall out. As a result, all that massive demand we talked about gets funneled toward the very limited number of existing properties in good locations. And the inevitable outcome? The upward pressure on rent just gets stronger and stronger.
Okay, so we've looked at the money, the demand, the geography, and the supply crisis. Let's try to put it all together and see what this all means for the future of Japan's real estate market.
So let's just recap the new reality. We have a historic price surge, and it's driven by that perfect storm of investment capital and real economic need. This has created a divided market with intense heat in the big cities and then these very specific targeted booms everywhere else. And underpinning the whole thing is a supply shortage that really favors existing buildings and puts continuous upward pressure on rents.
And this brings us to the final crucial question. In a market that's defined by these powerful forces, where new supply is constrained and demand is high, the whole game changes. The key challenge for everyone, from individuals to large corporations, becomes figuring out where true sustainable value can still be found.
If this explainer helped you understand the big picture of what's happening in Japanese real estate, we'd really appreciate it if you hit that like button and subscribe for more deep dives like this. Thanks for watching.